Okay, so in the previous video, we talked about choosing a start date for the beginning of your business bookkeeping. And in this video, we're going to cover how to make sure we start off with the right beginning balances in our balance sheet accounts. Balance sheet accounts are checking accounts, savings accounts, credit card accounts, sales tax payable, things of that nature. Those type of accounts have a beginning balance, and we need to start off with the right number. So if you are just starting out with your business and you're starting with day one of your business is your opening day, this won't affect you. You have zero beginning balance in all of your accounts. Most people start their business and then start to think about their accounting and bookkeeping. So for most of us, this will come into play. Now, you may have selected a beginning date. Maybe it was January 1st. For my purposes here, I selected February 1st, 2018 as my beginning date. So what I did is I went to my bank account, credit card, PayPal, in our example account that we're using here, and I recorded those beginning balances per my financial institution record. So I logged into PayPal, I recorded PayPal beginning balance as of 2/1. I logged into the credit card, recorded the balance as of 2/1 of 2018. So you log into your financial accounts, record the balance as of the date you selected to be the beginning of when you start your bookkeeping. I also did the same thing for sales tax and determined what amount of sales tax I had collected and still needed to remit as of 2/1 of 18. So first I'm going to show you, well, let me backtrack a minute. In another video, we talked about excluding transactions from QuickBooks that occurred prior to our start date. So we've already covered that. And I've already added all the transactions that matter during the time frame. I've already reviewed those and added those to QuickBooks over here in the banking section. So for the dates I'm using, everything I needed to add to QuickBooks has been added. So you might want to do the same thing as well. I want to show you what the problem is on the register, because QuickBooks does give you an opening balance equity amount, but it's wrong. So let me show you that real quick on the register. So if I scroll down here, QuickBooks assigned an opening balance equity of $786 as of January 19th. But I'm starting my record keeping as of 2/1 of 18, and my beginning balance as of 2/1/18 is $891.70. So QuickBooks is wrong. I also have written down my balance as of 2/19, and my balance as of 2/19 should be $498, and they have $393. What happens is that QuickBooks throws in a beginning balance. Usually it's from the date where you first linked your accounts, but often that's not the time we want. We went back in time and are picking up older transactions, or maybe even like picking a clean date like a couple days in the future even. So they throw in a balance from when you first linked your accounts, but that is rarely the right amount. Same thing on PayPal. I'm going to show you. I didn't bother linking my regular bank account in this sample because I figured 2 was enough to show you. So they threw in a 2/1. This time they have the date, a good date, 2/1/18, but they're wrong. The beginning balance in PayPal was $658.92, and they did it as $506. So here's what we're going to do. Don't be afraid to do this. Click on their balance that they threw in there and just simply delete it. It's going to be fine, I promise. Okay? Now keep in mind that transaction, mine was the first one. Yours could be buried. So yours could be buried in your transaction feed here in QuickBooks. So if you want to actually do this step before you get too far into categorizing transactions and adding them into QuickBooks, that might be a good idea as well. It usually has this R next to it, which stands for reconciled, but they're wrong in this case. And it'll say opening balance equity. So just find what QuickBooks did and delete it. We're going to fix it. Okay, so now that that's deleted, by the way, I know we've talked about in other videos the register, but the register is basically your running balance. So you start with the beginning balance and you've got your pluses and your minuses, and it's like your check register basically for each balance sheet account. So we're actually going to post a journal entry to record the correct opening balances. Okay, so here is a journal entry. We're going to go and select a date. The date you select should be whatever date you chose as your opening date for your bookkeeping. I selected February 1st of 18 for this example. Okay, now we're going to start finding our balance sheet accounts. So let's start with our bank accounts. In this example company, I only have PayPal as a bank account. So let's put that there. And the beginning balance I wrote down for PayPal was $658.92. Bank accounts, opening balances go in the debit column. Whatever that amount is that you need to put in here, put it in the debit column for bank accounts. So PayPal, bank, savings accounts, all goes in debit. Next, let's do your credit card account. Now, QuickBooks is trying to balance for us because in accounting, debits have to equal credits. So this is a helpful feature sometimes. Just be aware that they're constantly trying to balance even when you haven't finished with your entry. We're going to take advantage of that filling in the answer for us when we get to the end because our final figure will be a plug figure and they're going to calculate that for us. But right now, we know better than them. And we're going to add our credit card beginning balance of $891.70. And credit card balances go in the credit column. Next, let's do sales tax payable. See, they're trying to help us. That's okay. We don't quite need their help right now. And I had collected $21.63 in sales tax that I had not remitted yet. That goes in the credit column. So let me review this one more time. The amounts will be yours, but the column that you put them in is key. So bank accounts, PayPal accounts, savings accounts, as long as they're positive, they go in the debit column. I suppose if they're negative, you put in the credit. Well, I know you put in the credit, but hopefully you do not have a negative bank account balance. It'll go in the debit column, your positive PayPal, bank, savings. Credit cards, things that you owe, liabilities. So if you owe a payable to somebody and you need to record a beginning balance, a loan beginning balance, sales tax payable beginning balance, anything that you owe, most likely just credit card and sales tax payable, that beginning balance will go in the credit column, okay? Now this last one is going to be our plug. Once we've filled in all of our beginning balances, our plug goes to opening balance equity. So you can see here that came right after bank. We've got bank accounts, other liabilities, and then we hit our equity section. Now sometimes QuickBooks does rearrange these drop-down menus, and I hate that. Nothing's ever in the same spot, but find the equity section, find opening balance equity. And QuickBooks did the plug for us. So this is basically saying opening balance equity, being an equity account, that's basically saying this is what we came into the business with. And it's the difference between our cash we came in with and our liabilities we came in with, and the difference goes to opening balance equity. So you could have an opening balance equity amount that needs to go in the credit column in order for debits and credits to agree. That is perfectly fine. Actually, that would be better because that means you came in with more cash than what you owed. In our case, in our example, because we don't have the regular bank account linked, we're coming in with less cash than what we owe. Not a good place to be. So wherever QuickBooks fills in this number for you, when you come to the plug figure, do this one last so it'll plug in for you. Debit or credit column, it doesn't matter. Most likely yours will be in the credit column to balance out, hopefully, a big debit amount with high bank balances that you're bringing in. But you can see here at the bottom, we've got our debits and our credits equaling, which is how accounting works. So I'm actually going to add a description, opening balance equity. You can do the description however you like. Double check we've got the right date. That's very important. We've got our bank accounts and debits, liabilities and credit, and that's the difference. We're going to save and close. Okay, now we're back on our register screen. If you don't automatically come back to register, you can circle back and find the register. So let's see. This is for the credit card, $891.70. That's the correct beginning balance. Perfect. That's what we did. Our journal entry over here, number 2. We could click on here and see our journal entry if we wanted to. And then I had looked at the statement, and I had said that on 2/19, the balance was $498.78. So look, we're right. Now, if I hadn't categorized all of the transactions for the credit card during this time period, this could be off. So let me show you what I mean. Because since this is the register, items for review aren't going to appear in your register. They have to be categorized and added. When you do that, they end up in QuickBooks tab, and they also end up in the register. So let's say if I had a transaction that was actually dated to 18 and I hadn't added it yet, it wouldn't appear in my register, and I wouldn't have been able to check that I had the right balance. So hopefully that makes sense. So if you haven't finished categorizing, then that could be another reason why your register is off. Let me switch registers, show you on PayPal. Okay, so on PayPal we had said $658.92 beginning balance. And then I had said as of 2/28, $754.75. There we have it. So we're in good shape now. The numbers that QuickBooks brought in for us to try and be helpful were unfortunately wrong. That will probably happen to you too. But now we're squared away and on the right path. So there you go. That's how we're going to record our beginning balances for all of our balance sheet accounts.